Hello everyone, what's going on? This is Anurag and you're watching EduCurve. This is the 7th video of the series Human Behavior, and today we will be discussing mental accounting. This is a 500 rupee note and this is also a 500 rupee note. It is a fact that whatever this note can buy, this note can buy the same. This means money is fungible. Every penny is the same and can be spent in any way. However, we fail to see money this way. I might have earned it from a different source at a different time, and I might attach different feeling to this note. Just these things can make me spend this note differently than this one. We will see how. But before that, let us first understand the concept. What we generally do is we assign money to different categories and spend money according to these categories. This is called mental accounting. For example, we create entertainment account, bill payments account, fuel, necessities, education, etc. to ensure that our budget is in check and we spend smoothly. This pic might remind you of something similar. You may or may not do it by writing it down or may not follow it religiously, but each and every one of us do mental accounting to a certain extent in our minds. We will discuss 3 factors which influence the way we do mental accounting. Let's pick them up one by one. First, we will see how the source of the income and our feelings towards it impact how we categorize and spend it. In a study, Jonathan Levov and Pete McGraw found that if we inherit money from our parents, the money feels good and we are ready to spend it. But if we receive it from a source we don't like, such as a tobacco company, we feel that something is negative about that money. So in order to remove that negative feeling, we spend some portion of it in good ways, like giving donations or helping someone. Once we do this, we feel better and now we can spend the remaining amount whatever way we feel like. So the source of money, even when earned legally, changed our feeling towards that money. Let's discuss another example which was given by Richard Thaler in an article. 2 big sports fans plan to travel around 65 kilometers to see a basketball game. One of them paid for his ticket and the other one got one free from a friend. Now imagine that a snowstorm with heavy winds is announced for the night of the game. Which of the ticket holders do you think would go for the game? The one who paid for the ticket is more likely to go. Risk of the weather and love for the game is equal for both the fans, which is in no comparison to the ticket price paid. But staying home is worse for the individual who paid for it because he mentally accounted that sum for watching the game. The reality is that the ticket cannot be returned in both the cases and it is a sunk cost. The decision is new for both. Try to imagine that if one who paid for it asks himself, would I go if I had got the ticket for free? Then the decision could have been different for him. But it takes an active and disciplined mind to ask such a question. Same happened with bonuses. We see bonus with a very different mindset than we see our ordinary income. We feel as if it's something extra, something which we haven't worked hard for. So employees generally prefer to spend bonuses on things like lavish vacations, expensive brands or new cars, etc., on which they would generally not spend their regular income. It's not that you will keep money aside for it, but just because of bonus, you allocate more money for these things somewhere in your mind. Now let's consider another example which was given by Dick Thaler, where when the money changes its form, we change our decision. Imagine you bought a ticket for a theater which cost 2000 rupees. You go to the theater, open your wallet, and surprisingly the ticket is not there. It's lost. Now you have the money for another ticket, but would you buy another ticket? When this question is asked to people, most say, no, we won't buy. And when they are asked, what if you bought another ticket? How much would it feel was the ticket price? Most people say 4000 rupees. That is, they would feel that they have purchased 2 tickets. Now imagine another case where you haven't bought a ticket yet. Now you go to the theater and open your wallet, and to your horror you discover that you lost your 2000 rupee note. Now would you buy another ticket in this case? Most people say that yes, they will purchase another ticket, and this time they feel that the cost of the ticket was 2000 rupees. The thing is that once we have mentally assigned money to a category, it feels different. We all do accounting of money in our heads to help us think better about money. So when the ticket was lost, we feel that we lost the money from our entertainment account, so that has to suffer. But when we lose 2000 rupee note, that is lost from general money account. So we will cut our spendings from general account and would not change our decision of attending the concert. Lastly, let's see how timing decides the way we do mental accounting. Imagine that you got paid 2 lakh rupees for an independent project in France. If it were paid in advance 3 months ago in your home currency, then you might treat it as your own general income, which can be used for further allocation to different mental accounts, which you simply do with your money every time. But if it is paid in euros when you reach France, you will spend more money on your trip because you have got this money just on this particular trip, and you feel like this money is a part of your trip or in some way connected to your trip. Now here you have done mental accounting differently just because the timing of the money was different. Mental accounting can be useful since we are not able to think about opportunity costs in all possible ways. That is, if we do not organize money, then the number of options available for spending will be humongous, which humans would not be able to tolerate. So what is the right way of going about mental accounting? Should we do it or not? Mental accounting is helpful and we should practice it. However, we need to understand that money is fungible. So in whichever form it is our own money. No matter where it comes from, it is our own money. And no matter when and where we get it, it is our own money. And these factors should not influence how we do mental accounting. I hope this helps. Thanks for watching, and never forget to take others' perspective.